Welcome everybody. I wanted to make this video breaking down the trade on oil that I took, and I also posted the analysis before it happened on my Telegram channel. Let me actually show you. So this was my post. It said Brent oil, not really a market that I trade, but as long as price stays below the high of the order block at 118.43, I think we should see lower prices, 114 and 3/4 and 113 and a half, right? And at the time of me posting it, this is how the chart looked like. I highlighted important imbalances in my opinion that were important, and you can see that I did end up later in the day, I did end up finding an entry. I shared this too. I shorted this right here, and on the next trading day, right at the opening, all targets were hit. It was a nice meltdown here, and as you can see, price did in fact spend most of the time inside of this imbalance that I highlighted. And on my broker, on the this broker actually allows me only to trade Brent as futures, and you can see that on the futures chart there's an actual gap also, because there was a huge displacement down. So anyway, let's get straight to the business. I wanted to do a top-down analysis of why first I gave that bias and then the trade itself, right? So let's go on the daily chart. We see that we have been ranging for a very long time inside this price fractal. From this high to this low, we've been ranging, and eventually 2 days earlier, we did take out this high just by a little bit, but we did take it out, right? So obviously then the next step would be to drop down to a 1 hour chart. And actually, before we get into this trade, this was a good example of the ICT YouTube model playing out on a high time frame. Let's say if you cannot trade the lower time frames, you want to hold trades for a few days, you can trade on the 1 hour chart. Nothing wrong with that. So this candle broke that high and started retracing lower, and we had the displacement imbalance that took out this swing low, that created this high basically, right? And eventually price traded up inside the imbalance. So this is your YouTube model from ICT playing out, and let's say if you entered just here, your stop could have been a little bit above the candle that created the imbalance. So let's just say, I don't know, here. So this was a really good, pretty good trade. It would make sense to take partials below this consolidation, these lows here, right? So this was in the same day, nice 3.5 hour, and if you wanted to hold, this potentially could have yielded you more like 5-ish trade, yeah, 5R plus trade. So not bad at all. But again, this took 2 days to play out, and if you maybe trailed your stop, there's a high chance that you have been stopped out in this candle right here. So this is why me as a scalper, I don't like holding trades for long. And I just shared with you also in my previous video, I shared the Nasdaq trade that I took on the 1 minute chart that gave me a 3.5 hour trade in 6 minutes. So you see the idea here, I can go on the 1 minute chart and take 2 or 3 trades a day and get multiple R's and be done with it. Definitely, I mean 5R, I can do it in just 2 trades instead of holding it for 2 days. So anyway, this was just me showing you that this was actually a nice ICT YouTube model after price took out the high, which is essentially your premium array, right? So high probability of price going lower. So let's go to the and okay, while we're here, so I did not want, this was your order block on the 1 hour chart. You see that the next candle created a huge displacement, so this was an important order block. So this is why I said I do not want price to go above this level 1843, because if it does, most likely my short idea is invalidated. So you have to really think when you approach trading, you really need to think like a computer program, like an actual algorithm that works. The basics of any algorithm is really ifs and else statements. So if price does this, there's a certain set of instructions what you have to do next. If price goes up, you do this. But if price doesn't go up, if price goes down, this is what you do. You do a different set of instructions. So you really have to think like a computer program in that regards. This is why I mentioned this, that I prefer, short bias, but if we go above it, then most likely I'm wrong. So let's drop to the 15-minute chart. You see also on the 15-minute chart, this was also a large imbalance, and price really did stay inside of it, just wicked a little bit above, but the bodies mostly stayed inside of this. But let me just remove this. This is not as important. What's important is, let me bring the sessions back for a second. I think it's much easier to see just for me personally. So we created this high inside this 1 hour imbalance during London session. So it's an important high, and well, actually two relative equal highs. And price eventually came back up after it retraced lower. It came back up and took these highs out during New York session, right? We took them out, and let me just remove this. And price started retracing lower. Also notice that from this high to this low, we had only one short-term swing high based on the ICT definition using the 3 candles, right? This was the only high. There was no imbalances in here, so this high was important, because usually if we are short, we want to see some kind of a short-term high being traded, being violated, right? And we want to see a raid above a short-term high and then a drop. So what happened was, this was also a little bit, my entry was a little bit more advanced based on what I've seen the market do across the years, but I'll show you how you could have easily gotten also a a high probability entry. So this is what I did. Again, my entry was basically this was my entry here, right on this wicks, and let's see. So what I did was, again, I put a fib from this swing high to the lowest point before it started going higher, from this swing high to this swing low, and the moment price reached the 125 fib extension, I just shorted it. And I allowed myself, I had a 40 point tick. I'm not really sure how to what's the right word for it in oil, but essentially like 40 cents, but I think it's 40 ticks. Allowing for the price to really just, we have a small imbalance right here, so making sure that my stop is just a little bit above it and above the 1.5 fib extension. And why is that? Is because if you go and backtest, you'll see that a lot of times those short-term highs or lows, they're just gonna be, if they're gonna be purged, a lot of times price will really just stop around these areas between 125 and 1.5. So I just shorted here, allowing myself to be wrong. Again, this is an asset class that I barely trade, and the last time I traded oil, it was only last year. So, and my risk was also very small. I literally I just took this trade just honestly just for fun and to prove myself that actually my my analysis is correct. My risk was only $40, just $40 So if I was wrong, it wouldn't affect me at all. Because again, an asset class that I'm not very familiar with, but just to show you that algorithmic principles work everywhere, pretty much. And so this was my trade. I believe that this was enough for the run above this high, and we should keep going lower. And basically, we're still inside that 50-minute imbalance. And as you can see here, all targets were hit. I did get my 10R. Actually, I closed somewhere else, so a little bit more than that. I shared that on the Telegram also. So around here I closed, and honestly, this trade was such an outlier for me, because I really, again, I'm a short-term trader, holding through all this time, it was, that's not what I usually do. But again, I only risked $40, and I already was I put my stop at break even, a little bit in profit, so I didn't really care. And my nature as a scalper really wanted to take partials before the end of the day around here, but I went on the lowest possible position size my broker allowed, and so I couldn't take any partial, so I said, you know what, whatever. I believe this is a draw on liquidity, so I'm just going to let it ride. And the fact that we closed, also figured that this is where we closed for the day. We closed so close to these lows that I was thinking, okay, Asian session should have another displacement lower. The only thing I wasn't expecting is that we have this huge run down right at the opening, so it was interesting to see. But the logic was there, so I just closed the trade here. And again, it was, the irony is that I really didn't care much about this trade, but it ended up, if you do the math, $40 times 10, that's already something, pretty significant. Anyway, this was an advanced entry based on me seeing how the market usually, how much the market extends until it wants to reverse after taking out like a short-term, intermediate short-term high, right? So this is something, again, this might not make sense right now, but I promise you, if you spend at least a year, well, no, let's be honest, 1 year is not enough, but maybe a year and a half or 2 years studying the markets, and if you come back 2 years later, rewatch this video, I promise you it will make much more sense. But I'm going to show you how basically this was the inception model that I shared, the entry based, safe entry based on the inception model. So we had an imbalance here. All right, we had an imbalance. Short-term low was broken here, and this imbalance pretty much overlaps with the 1 hour imbalance, and it's inside the 50-minute imbalance I outlined earlier. And if you really look at it also, so this is really another ICT YouTube model entry. Again, swing low broken, they created the high, came back, a price came back inside the imbalance a few times, one here, twice here. So you could have shorted this, let's say here, and you stop. Could have been just a little bit above this high, again trusting that we don't need to revisit that area. And whatever your target is, and if you wanted to trade these lows, this was a nice intraday trade. Again, 5+ hour trade. This was very nice. So yeah, this was really the idea behind this trade. Just showing you, and behind this video, just showing you why I took this trade right here, why I had this bias for shorts, and just showing you a safe entry while you learn, while you're not as experienced. This was your basically my inception model, and inside kind of inception model really overlapping with Michael's model that he shared on YouTube, of displacement breaking the swing low. So again, as you can see, time and price are fractal. Whatever time frame you're comfortable working with, you can utilize this information, the high time frame bias, and execute the trades. So I really hope this was insightful. You learned something. And actually, if we look at the, again, so this, I think this is the oil CFD chart, so you see only this as like just a whole candle, but if you look at the futures, again, this is just your huge gap right there. Right. Yeah. So imagine also, and this is, another important point is, why a lot of people fail is, let's say you can't just pick an imbalance and take a trade based on price get inside of the imbalance. So you have to understand the high time frame narrative, and it comes with time and experience. Let's say, okay, you did have an imbalance here, right, and the price did in fact bounced back up, took out this high, so it could have been maybe some kind of a small trade here. But again, order flow, the high time frame order flow, just like I showed you from top-down analysis from daily to 1 hour, is bearish. So you want to focus on imbalances that are the imbalances that are in alignment with the high time frame order flow, just so for the price to go short. And let's say also, if you saw this imbalance and you entered at the end of the day, and then this happened, then this would just destroy your account probably, because when this opens, when this gap happens here, really. It will, if you had the stop loss, it would be violated, right? It would only close at the the earliest available price. So if you had your stop loss somewhere here, it would be absolutely, this would be devastating. So again, it's very important to understand order flow. You can't just pick an imbalance and look, oh, you could this. I mean, again, this is a nothing wrong with making this mistake if you're new. While you're learning, you might have saw that, I don't know, from this high to this, from this low to this high, prices in a deep discount, and you have an imbalance, so you wanted to go long. But again, high time frame order flow is bearish, so this is where you would be wrong. You would take a loss, and again, if you stop loss, this would be really devastating actually. And this is why I don't really like holding trades over the session rollover. And again, sometimes things like that happen if you're on the wrong side of the market. It can be really painful. So you have to keep in mind the market structure, what's it, the drawn liquidity on high time frames, and if you pick fair value gaps in alignment with the order flow, then you'll be good. Just like I showed you here, we had two imbalances supporting lower prices, and this is why you can see that price literally just stayed for the most part inside of them. They were important. But if you had an imbalance here, price only gave you, well, you could trade this, nothing wrong with that. I would have probably scalped this if I was trading it really just again inside of this order block. Pretty good trade actually, but this was a counter trade against the high time frame order flow. So I know I repeated myself, I guess, many times with this high time frame order flow, but I want you to really get inside your brain and kind of make a statement, make a point that it's very, very important. A lot of people fail thinking that, okay, I see an imbalance, let me just take a trade, without understanding the narrative. And that's why they go and then they quit, or they blame that this stuff doesn't work, when it absolutely works if you align yourself with the order flow. And if you are new, don't get frustrated if you don't get it right away. It's hard, it's really difficult, it takes time and a lot of practice to see those things, but as long as you don't quit and you keep practicing what Michael teaches, you at some point you will wake up and it will all make sense. It will all make sense. All right, so on this note, I'm going to end this video. I really hope this was interesting for you. Let me know what you think, and I'll talk to you next time.